morning. It's 5 a.m. in New York, 10 a.m. in London. I'm Matt Miller in for Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. 2 more days. President Trump once again says the Iran war is close to over. U.S. stocks hold at an all-time high. And AI euphoria. Investors pour into Anthropic for a new round of funding. ASML boosts its guidance on surging demand. And the last stretch of big bank earnings. Bank America and Morgan Stanley are on deck today. Let's take a look at futures. They're higher again after a big rally yesterday pushed us all the way to 69.67. So 1 point shy of an all-time closing high yesterday in the cash session. Today in futures, we're looking at slight gains here on S&P, slight gains for the NASDAQ as well. The small caps looking at a red arrow, but really everything's pretty much unchanged here. The focus, well, here you can see Treasuries 375, 425, and 485. You can see the 10-year coming up just far less than 1 basis point. The focus of the world, though, obviously remains on oil, as Iran reports that a ship has got through the blockade, although that hasn't been verified by the U.S., and we haven't verified it independently either. Brent crude right now trading at $95.38. NYMEX crude down to $91.37. A little bit of a green arrow there, but we had such a drop yesterday that this makes sense. Gold at $48.19 a troy ounce. For some of the single stock stories that we're watching this morning, let's get out to London and Chloe Melee. Chloe?
Good morning, Matt. Let's start with a couple of tech companies in the green today off the back of some AI collaboration. So Broadcom expanded its partnership with Meta to deploy AI infrastructure, and GitLab expanded its partnership with Google Cloud for AI agents. And so those two expanded partnerships are being welcomed quite warmly by the market, and we have got both Broadcom and GitLab move higher in pre-market trading today, especially GitLab up almost 8%. Moving on to Robinhood, which is also in the green today. It is reacting to the SEC approving plans to remove these restrictions on day trading activity by smaller investors. And we are up more than 6% this morning in pre-market trading for Robinhood. We had the head of brokerage at Robinhood saying this was a significant step towards opening up this for retail investors and empowering retail investors. And of course, that is very good news for Robinhood as a retail trading platform, and therefore we are up there. And finally, Hermes over in Paris is down quite significantly this morning after sales disappointed investors. The magnitude of that share price reaction can also be explained by the fact that Hermes is traditionally quite a resilient company within that luxury sector, and so we are down more than 8% today.
Chloe, what is going on with the luxury houses? I mean, Hermes, Kering with Gucci, LVMH, have they all disappointed?
Yeah, they're all disappointed. So we had LVMH on Monday and then Kering last night, and all of them have said really that they've been badly affected by the war in the Middle East. So that has led to lower demand in kind of key Middle Eastern shopping hubs like Dubai, but then also there's been weaker consumer confidence, travel disruption that's really reverberated across those different markets. So for example, fewer Middle Eastern shoppers going to those Paris Hermes stores or LVMH stores, and so they've been really affected by that conflict, and that's really had an impact across growth for all of those luxury groups.
All right, we'll keep an eye on the bag makers. I know Ferrari, often talked about in the same breath with those companies, is out with earnings in the beginning of May. Chloe Melee there with a look at your stocks. Coming up this hour, more on this equity market with JPMorgan's Jack Caffrey, and Stephen Biggar of Argus Research joins us on bank earnings later this hour. But first off, President Trump once again saying he sees the end of the war with Iran in sight.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
U.S. CENTCOM Commander Brad Cooper posting on X earlier, quote, a blockade of Iranian ports has been fully implemented as U.S. forces maintain maritime superiority in the Middle East. Joining us now is Jumana Bersetchi in Dubai. And Jumana, it's not hard to believe that the greatest military on earth retains superiority, but the Iranians are reporting that they've got one ship through the blockade. What do we know?
Yeah, so we've sort of been micro-analyzing various shipping movements through the Strait of Hormuz since the U.S. introduced their own version of the naval blockade that was just over, I'd say, 40 hours ago now. We did get that update from CENTCOM. You just showed it there. They say that the blockade has been very successful and that 6 merchant vessels actually turned away and went back to these Iranian ports on back of U.S. instructions. And I should just add that there are no hostilities, okay? There hasn't been any military escalation around the Straits, which of course is what some people were fearing when it went to effect on Monday afternoon. But in terms of the ships going through, remember yesterday we were keeping a close eye on one of them, the Rich Starry. It seemed to have made it through the Strait, but then it stopped and seems to be returning back now. So again, unclear where its final destination is. And earlier, a couple of hours ago, the Iranian state media is saying that one of their own vessels actually managed to successfully transit through. That, again, has not been verified by our own shipping colleagues and also by other satellite imagery. But what we have detected is there is a sanctioned vessel that is sailing alongside that Rich Starry vessel that could potentially be the one that Iran is referencing. But again, at this point, it is a bit of conjecture, and we don't fundamentally understand whether it had some link to an Iranian port before making the transit through the Strait. The bottom line is that the U.S. are exerting this pressure politically, but then also economically on Iran as well. And the reason they're doing this, Matt, is to lay the foundation for the second round of discussions. They want to wrest this leverage point away from Iran with the hope that if they do meet again in the next coming days, Iran will be more open to making some of those concessions that the U.S. have been pushing for, especially because the target here is to cut off a key economic lifeline for Iran, given 90% of their economy relies on oil exports that pass through the Strait. Right.
Although, I mean, we had lifted sanctions on Iranian oil. So for the first 40 days of the war, Javier Blas estimates they were making $175 million a day, as opposed to the $100 million a day they were making before the war at lower prices under sanctions. So they have made a windfall at the beginning in terms of economics. But as President Trump says, and obviously you've seen very clearly, the U.S. and Israeli bombing campaigns have really decimated their military forces. Jumana Bersetchi in Dubai, really appreciate your reporting on this. Let's get over to Washington, where Treasury Secretary Scott Bessent remains optimistic that President Trump's original tariff rates could be reinforced this summer.
We had a setback at the Supreme Court in terms of the tariff policy, but we will be implementing or conducting Section 301 studies so that the tariffs could be back in place at the previous level by beginning of July.
Joining us now is Washington Deputy Bureau Chief Laura Davison. The tariffs have been one of the key pillars for President Trump, obviously, in his campaign and in the beginning of his presidency to raise revenue. And he did raise a significant amount of revenue in the first year of those tariffs. How does it look right now, Laura?
So that Supreme Court decision that knocked down a lot of those tariff policies really, put a big hole in this tariff wall that Trump was trying to build. Average tariff rates on imports into the U.S. fell from about 16% down to about 9%. So Bessent there was mentioning that the U.S. is looking to rebuild that brick by brick. The fact of the matter is though the Trump previously was able to just sort of unilaterally go out and say that he was imposing tariffs on a certain country or a certain type of good, effective essentially immediately. Now the White House has a much more arduous process to implement some of those tariffs. They need to show that there's a national security concern or a labor practice concern or some other reason that they need to implement this tariff. They have to go through and do a study. They have to then go through and implement. So the fact of the matter is that they just have both fewer tools as well as much more arduous, slower to implement. So beginning of July, is technically possible, but as the administration has been distracted with Iran and other issues, seeming less and less likely as the weeks go by.
American consumers and corporate shareholders have been paying for these tariffs, and there was always kind of the light at the end of the tunnel that President Trump might be cutting stimulus checks with the revenue. That's something he talked about a lot in his first year in office. He hasn't said much about it lately. In fact, he actually has said that we can't even afford now to pay for child care, Medicare, and Medicaid because of the war that he went into in Iran. What can we hope for now, Laura, in terms of stimmies?
The stimulus from the tariff revenue is, I would put it at 0 to not likely at all. This is one thing that Congress would have to implement, and Congress has said that they're not going to do that. The other fact of the matter is the U.S. still runs massive budget deficits, and this tariff revenue only addresses a small piece of that. So there's a lot of concern, both from Republicans as well as Democrats, who say, look, if we're going to be, putting this money, we should be addressing debt and deficits, not putting it back out to the people. But this is, sort of one of those ideas that sounds great on a campaign trail, sounds great at a rally. It's a way to get voters energized. But when it comes to the actual practicalities of this, the math also shows that with the amount of tariff revenue raised, we're talking, tens of dollars per household, not much to really even make a difference.
Laura, thanks very much. Laura Davison there, Deputy Bureau Chief in Washington, but currently, as you can see, in Hong Kong. Turning now to tech, shares of ASML climbing in Amsterdam after boosting sales forecasts. Surging global AI spending helped fuel demand for its chip-making machines. Bloomberg's Neil Campling joins us now for more. So the AI story helping ASML, and they're not hurt by the higher memory costs that we're seeing hurting other people in tech today.
That's right, Matt. ASML creating the machines that are required to create the chips. So actually where the memory crunches will lead to higher ASML orders. So ASML raised their guidance for the fiscal year to basically as much as 40 billion euros for the year. Now, the midpoint is in line with where the street's at. So the stock isn't moving much on a one-off basis, but the demand trends are there. The CEO spoke early on this morning about how demand continues to outstrip supply. And how many times have we heard that in the AI and the chip race in recent months? So ASML stock is up 120% over the last year. As a European basket of AI winners is up 40% over the same period. So ASML has already been massively outperforming the sector for AI stocks. So
people still buying those chip-making machines. What about the cell phones on which we all use AI? For the first time in years, we actually saw a drop across industry shipments, didn't we?
We did. IDC data out this overnight suggesting that we've got a mid-single-digit decline in the first quarter of this year, primarily because of the component cost increases. Now, IDC are saying actually that the risk is this is going to get a whole lot worse this year. And of course, Q1 is a lower number in terms of the appetite for smartphones than we see traditionally into the holiday season, particularly in the US. Now, the worry is that they have said that in some components and in some markets, the component costs have increased by as much as 50% already, that the risk is this is going to get a whole lot worse. So we're going to need some massive new devices, perhaps, to help stimulate demand. So let's hope that that new iPhone flip phone makes it to fruition this year, as many hope.
Hey, as we get closer to the U.S. Open, we're still over 4 hours away, but I'm looking at Avgo, Broadcom, one of the biggest companies in America, making another chip deal on the AI front. What do we know?
So this deal is an extension of an existing relationship that they have to create these computing units called TPUs, and it's really to help Meta to reduce the reliance on the NVIDIA ecosystem. Now, whilst they use NVIDIA and they also use AMD, the relationship with Broadcom is going to accelerate further, and clearly what they've seen through testing suggests that they like the results, so they're going to look to create their own custom silicon solutions to be much more deeply embedded in their solution systems for the next few years. So it's another tick in the box, if you like, for these technology developments, these AI compute powers, and we're seeing lots of, whether it's in compute or whether it's in quantum whether it's in TPUs and GPUs, we all love an acronym, of course. There's huge amounts of developments every single day in the tech space.
All right, Neil, great to get some time with you. Thanks so much for joining us, Neil. Campling runs our tech coverage for us out of London. Let's get to some of the other top trending stories on the terminal this morning. PIMCO buys all of the $400 million of bonds issued by a Blue Owl private credit fund. The bonds were priced to yield 6.5%, were rated Baa2 by Moody's and BBB- by S&P, the lowest investment grade rating. It is unclear if PIMCO will hold on to them. Representatives for PIMCO, Blue Owl, and Morgan Stanley, which was the book runner for the offering, declined to comment. A New Jersey congressman is looking to roughly double the cap on state and local deductions to $80,800 for married couples. Democrat Josh Gottheimer unveiled his plan that would lift the cap from its current level of $40,000, the ceiling for both single and married filers. Gottheimer is a co-chair of the bipartisan SALT caucus, which capitulated last year, and that's why we still have a cap and a limit on who can take those caps. Global shipments of Stellantis surged by 12% in the first quarter, led by high demand in North America for new Jeep and Ram models. Shares of the company are gaining after an otherwise disappointing quarter. The stock has been this year's worst performer among its peers after a massive record-breaking write-down. Coming up, the last two major U.S. banks set to report earnings this morning. What to expect next? This is Bloomberg.
On the consumer side, spending's been very resilient, through the last month. It's still up year on year every week. People are certainly spending more on gas than they were, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
Two more big banks have earnings due today. Morgan Stanley and Bank of America will report in a couple of hours. Let's bring in Tom Metcalf to see how the week has gone and what to expect today. Tom, first off, on the earnings that we have seen, Goldman Sachs, JPMorgan, Citi, Wells Fargo. How does the report card look so far?
Yeah, look, broad brush, pretty reassuring. No sort of really awful skeletons in this closet. I mean, the interesting thing for me yesterday was JPMorgan. My gosh, those traders really blew it out the park. And yet you still had Jamie Dimon, putting his bearish hat on and giving a bit of kind of downbeat guidance about, potential risks out there. But if you just look at the hard numbers of JPMorgan, all seems rosy. In the world of Wall Street, at least now they've managed to navigate, the crazy volatility, all these big macro points. And then it's really interesting to just hear then the Wells Fargo CFO talking about, again, even for a Wells Fargo whose results were a little bit more disappointing, they missed estimates, basically just saying, look, the consumer right now in the US is pretty resilient. So today, Bank of America, Morgan Stanley, and I think they'll sort of tell tales of the tape on either side, right? Morgan Stanley will be looking at how the capital markets business is doing. Bank of America, I always look for that. For again, that sort of picture of the US consumer and if there is any signs of distress there.
The trading business is going to be one that we watch closely after Goldman Sachs had a record in equity trading. As you mentioned, JPMorgan traders pulled in, I think, over $11 billion in the quarter for a record as well. There have been, though, some worrying signs. Goldman Sachs missed by a lot on FICC trading. What do we expect from Morgan Stanley and Bank of America?
Yeah, that miss is looking more and more unusual when you compare it to what JPMorgan and Citi were able to do yesterday. So, look, I think for Morgan Stanley, that's the question is which camp are they going to be in? Kind of interesting if they're in the Goldman camp, because then you start to think, oh, okay, is it JPMorgan and say a Citi taking share? And also with Morgan Stanley, I always look very closely at those equity traders. Traditionally a real big area of strength for Morgan Stanley, so it'll be interesting to see how close they can come to the Goldman equities traders, who, unlike their FICC brethren, did a very good job there, really smashed through their estimates.
Tom, thanks very much for the update. Bloomberg's Tom Metcalf covers banks for us out of London. Don't miss our exclusive interview, by the way, with Morgan Stanley's CEO, Ted Pick. That's on my television program, Open Interest, at 10:30 a.m. New York time. This is Bloomberg. Time now for your front page news. First up on the New York Times, Vice President J.D. Vance taking issue with Pope Leo's comments and invoking World War II to defend the U.S. bombing of Iran. Vance, who is Catholic, spoke at the University of Georgia.
I think that it's important, in the same way that it's important for the Vice President of the United States to be careful when I talk about matters of public policy. I think it's very, very important for the Pope to be careful when he talks about matters of theology.
Next up, the Washington Post reporting that U.S. Attorney Jeanine Pirro has asked federal prosecutors to wipe out the seditious conspiracy convictions of 12 members of the Proud Boys and Oath Keepers who helped plan the January 6th riots. The request is likely to be granted, would wipe out the last remaining convictions related to January 6th. Coming up, JPMorgan's Jack Caffrey seeing earnings further accelerating this year. He joins us next. This is Bloomberg. Good morning, 5:30 a.m. in New York City, 10:30 in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. 2 more days. President Trump once again says the Iran war is close to over. U.S. stocks holding near an all-time high. And AI euphoria. Investors pour into Anthropic for a new round of funding. ASML boosts its guidance on surging demand. And the last stretch of big bank earnings, Bank America and Morgan Stanley on deck today. Let's take a look at what's going on with futures this morning after gains yesterday. Really little change on S&P and NASDAQ futures. The small caps moving down a little bit more significantly. But as I say, yesterday we closed the cash session at 69.67, which is 1 point off of an all-time closing high. Treasuries also doing a whole lot of nothing this morning. The 2-year yield actually moving up 1.5 basis points, 376. The 10-year yield at 426 and the 30 at 486. Let's take a look at oil, the global focus today. Moving up a little bit more, but we have come down so sharply from NYMEX crude at one point hit, I think like a little over a week ago, $117 a barrel. And today we're looking at $92.60. Brent at $96.04. You can see gold there at $4,800 a troy ounce. For some of the single stock stories that we're following for you this morning, let's get over to Chloe Melee. She's in London. Chloe?
Good morning, Matt. Quantum computing stocks are on the rise this morning after NVIDIA unveiled new AI models that are aimed at accelerating progress within quantum computing, essentially helping researchers build and develop new quantum models and processes to develop across a range of applications. And so this is really driving gains across that sector this morning. And in particular, D-Wave Quantum is up almost 9% in pre-market this morning. Moving on to Robinhood, which is reacting very positively to the SEC going ahead with removing restrictions on day trading activities by smaller investors. And so we have the head of brokerage at Robinhood saying that this will really is a significant step towards empowering those retail investors. And therefore, we are up about 6% for Robinhood. And finally, Hermes is not doing so well this morning in Paris, really taking a hit after really disappointing sales following in the footsteps of LVMH and Kering. So the luxury sector as a whole really struggling because of the war in the Middle East and the impact on sales. And now this really raises questions about when we will get that luxury rebound, that luxury recovery after those disappointing updates from all 3 major luxury companies.
All right, Chloe, thanks very much. Chloe Melee looking at some of the single stock stories for you this morning. Let's get back to tech. One of the single stock movers that we're seeing rise again today is ASML after the chip-making equipment manufacturer boosted its full-year sales forecast. Surging global AI spending obviously helps fuel demand for those machines. Joining us now is Bloomberg's Shona Ghosh. Shona, what do we know about ASML? I mean, it seems that demand is always more than supply in this AI chip-making game.
Good morning. And yes, it is, as we're in this current big AI infrastructure boom, you have that demand flowing through to chips that power the AI data centers and AI models. And then in turn, sort of lower down the chain, you have the demand for ASML's tools, which are integral for manufacturing chips such as NVIDIA's Blackwell structure, for example, and all the other cutting edge AI chips that are all surging into these data centers. And ASML is the only company that makes the machines that can make the most cutting edge chips. So it has the stranglehold on the market. And the longer the AI boom goes on, the better position that ASML will be in.
By the way, Avgo Broadcom shares up in the pre-market here after a deal with Meta, another deal with Meta. What do we know about that contender?
I think it's, overall, it's all about continued confidence, just because in the background, we have worries that at some point, that the music might stop and some of the spending will slow down. But at the moment, the sign is that, from the hyperscalers like Meta, there is renewed confidence, ongoing confidence in the amount of AI capacity that we need, compute capacity. And so tie-ups like Meta and Broadcom shows, it's diversifying the chip partners that it wants. And overall, that's really good for the ecosystem to show diversification in this way. And again, we see this sort of trickle-down effect for ASML, which, as I say, has the sort of stranglehold on some of the manufacturing equipment.
Those are the publicly traded AI stories. Of course, Anthropic has occupied a really strong place in the media lately. While it is still a private company, it's drawn more investor offers to put it at a value of about $800 billion.
That's right. I think it's important to note that doesn't mean that Anthropic is going to accept these offers. Ultimately, this is about investors piling in the months, probably, before the company considers listing, which means it will be open to everyone. At the moment, there is pent-up demand for a share of Anthropic in the strong belief that as and when it does go public, the share price will boom. So you have this rush of investors coming in saying, we really want to get into Anthropic before it lists, and it's driving up that valuation, again, showing confidence in the company after a few questions about whether it's running into a bit of a kind of compute shortage because it hasn't sort of spent money on capacity in the same way as some of its competitors, but clearly that's not bothering investors.
Right, there's a certain mythos surrounding Anthropic. Shona, thanks so much for joining us. Shona Ghosh there covers tech for us. Let's get to JPMorgan's Jack Caffrey. He weighs in on earnings this earnings season, writing, quote, "We see earnings further accelerating this year, and with the more material earnings gains happening away from the concentrated AI-related equities." I'm pleased to say he joins us here on set, dark and early this morning, equity portfolio manager at JPMorgan. Jack, so I want to get to the rest of the market, but just because of this slew of AI news that we have again today, how do you see that juggernaut of spending going forward?
Well, right now it seems that despite the capital spending announcements going up 50%, 70%, hundreds of billions of dollars, we still have shortages. And I think that enthusiasm feeds to investors, which gives them that willingness to continue funding, trying to resolve some of these shortages on a compute basis, which creates what's been sort of a virtuous cycle, but admittedly a very concentrated virtuous cycle. And I think when we start talking about companies spending $600 billion, $700 billion, I think we have to keep in mind that one company's spending is another company's revenues. And I think that's the lever to how we get away from just a focus on the Magnificent Seven towards the broader market. And hopefully we will stop talking about the forgotten 493 and talk just about the S&P 500. I mean,
some of these companies have had a bumpy ride, right? Microsoft at one point had lost a quarter of its value year to date. It's now coming back. NVIDIA had been down year to date. It's now up about 5%. Amazon had been down year to date. Now it's back up about 7 or 8%. Are these companies, I mean, at worst, are they a safe haven in times of trouble? When you see a war in the Middle East and a doubling of oil prices, do you think, that's a good place at least to hide?
Well, I think for the last, call it 3 years, really, we've had this ongoing battle between the cyclical and the secular. And it really hasn't been much of a battle because the secular have largely massacred the cyclical up until, call it really the summer of last year, when I think investors began asking about that second derivative. How possible was it you would start seeing 50% growth turning into 100% growth? And I think that led to, to borrow from a technical term, a consolidation in terms of time more so than price. And then coming into this year, you began hearing some wrinkles of inflation coming back to life. And I think that makes those companies that are too reliant on their earnings 5-10 years from now becoming a little bit less valuable. Add a war, and then suddenly energy becomes the hottest thing to own. Apparently no one told energy traders yesterday because they were aggressively selling that as we lean into the most recent sort of set of policy pivots that are coming out.
What do you think, by the way, will be the result of the jump that we've seen in the underlying commodities? Crude, obviously, it's not $120 anymore, but $95.
Well, there's been some interesting talk if 85 is the new 65. And I think I mentioned that because about a year ago, you would have seen most oil company investments being underwritten about a belief that long-term oil prices might have been $65 a barrel for WTI. The U.S. is in a relatively insulated position, given that we more or less are not only the largest oil producer, but actually a bit of a modest oil exporter. But we wind up being a refined products importer, particularly here in the Northeast. And, when we start thinking about where our gasoline might go over the summer, if it's not clear if Europe isn't getting as much oil as they'd like, if we'll be getting as much gasoline as we want.
I mean, we hear all the time that we're in an insulated position, but we still have to pay for this oil, whether we produce it here or not, right? And especially if other countries come and start buying it all up, bidding up the price, yet it doesn't seem to be denting earnings expectations.
I think in the shorter term, it hasn't really dented earnings expectations. You are seeing companies, recognizing rhetoric matters. You're not talking about price increases, you're talking about surcharges. But I can think of one company 2 weeks ago, we're going to put through a 7-10% surcharge as we better understand what's going on. I think investors are looking at surcharges, that's a price hike. I think customers are hoping that surcharges are effectively temporary and that we're going to find some way to navigate through this. But you certainly see, the Cleveland Fed survey of inflation expectations nearer term pushing something closer to 5%. You put that with real GDP growth that seems to be slowing, certainly over the past quarter, the last 90 days. The Atlanta Fed survey has gone from 5% to call it 1.5% in terms of what real GDP is now. Oddly enough, that winds up giving us similar nominal GDP than we might have been thinking about this year, and financial assets are nominal. So if I can get 7% sort of top line, people might think that's pretty good. It just might not be the composition of the top line we wanted. It might be more price than volume.
So what do you see in terms of actual corporate earnings? I mean, really some astounding numbers, especially considering that we've been going like this for a while.
I think an investor underestimates the U.S. corporate sector's ability to drive profitability at their peril, and certainly at their likelihood of losing out. I think what's even more impressive as we look back over the past year, companies have had to deal with the uncertainty around what tariffs might do to their supply chain, what their capital spending decisions might look like under the one big beautiful bill. And as a result of that sort of uncertainty, your bias is to sit on your hands. I don't have the luxury of being able to sit on my hands. I'm supposed to be mindful and thoughtful in responding to that uncertainty. Now we have an excursion in the Middle East, which may be over tomorrow or it may drag on. We'll certainly hear more policy pivots, I think, more likely than not as negotiations extend. But I'll come back to, and I have the luxury of having 35 analysts supporting me across large and mid-cap sort of securities. And when we look through their annual earnings forecast, it winds up being a high teens growth rate versus about 11.5% last year. So companies are finding a way. And I think that's ultimately what we have to lean into as an equity investor. I start as an optimist, and I want to come back to companies will find a way to make money.
All right, really smart analysis, Jack. I appreciate you joining us this morning. Jack Caffrey there of JPMorgan Asset Management. Now let's get to the other top stories trending on the terminal this morning. The Washington Post is reporting that the Pentagon is sending thousands of additional troops to the Middle East in the coming days. They would include troops aboard the aircraft carrier USS George H.W. Bush and several warships escorting it. The Pentagon and U.S. Central Command declined to comment on the troop movement. U.S. Treasury Secretary Scott Bessent tells British media that the Iran war is worth a small bit of economic pain. The statement comes ahead of his meeting today with his UK counterpart, Rachel Reeves. Earlier this week, Reeves told The Mirror she is very frustrated and angry the U.S. went into war without a clear exit plan. New York Governor Kathy Hochul is backing a New York City tax on second homes worth at least $5 million. It aims to raise $500 million a year by levying a yearly surcharge on the multi-million-dollar pied-à-terres. The tax plan, I should say, is a compromise between Hochul and New York City Mayor Zohran Mamdani, who has pushed for higher taxes on the wealthy and large corporations. Coming up, we'll catch up with Stephen Biggar of Argus Research as we count down to earnings from Morgan Stanley and Bank of America. This is Bloomberg.
On the consumer side, spending's been very resilient, through the last month. It's still up year on year every week. People are certainly spending more on gas than they were, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
All right, we're 4 down, 2 to go in big bank earnings. Morgan Stanley and Bank of America set to report before the bell. Let's get to Stephen Biggar, Director of Financial Institutions Research at Argus Research. Stephen, let me first get your take on what we've seen so far. I mean, Goldman Sachs had awesome equity trading, but a huge miss on the FICC side, and it looks like it may have been an outlier.
Yes, good morning. Certainly did seem to be. Goldman uncharacteristically weak in FICC trading relative to expectations, but as you said, the equity side certainly did very well. We're looking at record quarters for a couple of these banks in terms of because of the volatility, the trading volatility that we've seen, particularly in March. We had volumes up something close to 30% from prior year, so very strong quarter there.
What do you expect from Morgan Stanley and Bank of America today? I mean, are they going to be publishing these massive trading numbers, the likes of which we've seen from JPMorgan and others?
Well, I think so. Yeah, Morgan Stanley tends to do quite well there, but I think what's grabbing a lot of the attention as well is the investment banking side. So we've had so far 20 to close to 50% increases in the investment banking side, and in particular, we're just seeing a surge of M&A activity. IPO activity, for what it's worth, has been picking up, not quite to the level that we expected, and certainly some pause here maybe with the Iran conflict. But yeah, capital markets have really shown their ability to shine in this environment.
Yeah, we saw a big jump in investment bank advisory revenue at a couple of these banks. Goldman Sachs, top of the league table. JPMorgan, number 2. Morgan Stanley, number 3. Bank of America is way down the list, I think at number 9. Do you expect any moves in that table this year?
Well, not particularly. These banks all are extremely competitive and tend to get the best deals. You look at SpaceX, for example, coming out this summer, likely to be the biggest IPO ever. There's 20 investment banks that are working on that as underwriters, so that will get spread around. The one that very much intends to try to grab some market share is Wells Fargo. Now that the asset cap has been lifted, they are pretty far down. Beyond just outside the top 5 banks, but they do plan, because of now their ability to engage corporates with financing and grow the balance sheet, they expect to grow some market share there. Who they take it from is not particularly clear, and this is not a 6-month or 1-year type endeavor. They're looking out the next 3 to 5 years and trying to get a little bit more share, but I think they're in a good position to do that, coming from kind of an underdog position right now.
Yeah, I see Wells Fargo at number 12, right after UBS. Stephen, when we talk Wells Fargo, I think automatically of the private credit story. Not that it's going to be a systemic issue, but it's one where we're starting to see investors question bank exposure. What do you make of the private credit story, and will we hear about it today again from Bank of America and Morgan Stanley?
Well, we heard a lot about private credit, obviously, coming into the quarter, and we heard a lot about it yesterday in the conference calls as well. And this is one area where bank managements have just not, seen the signs that there's a lot of risk or exposure here. They have scoured their portfolios, their balance sheets, looking for exposure, particularly in the software space, which has been the one most highlighted. And they just don't see it. In many cases, they've actually broken it out, added some additional disclosure in their presentations about that. We're looking at, senior lending being better than 98% here in some cases. We're looking at the defaults just not coming through. So I think we have, this is a case where we had a weaker player in the industry that took some risks, that being Blue Owl, and resulting in some defaults there and some worries by investors and redemption rates higher than the 5% allowed. So that's put a kind of a bad name to the group. But I'm encouraged to see some rebound in the names like Apollo, KKR, Blackstone, which I do cover, in the recent week, and after banks have come out and said, look, they don't think this exposure is that much to worry about. The headlines, are just a little bit more than what they're seeing live on the ground with these portfolios.
Stephen, great to get some time with you. Thanks so much for joining us. Stephen Biggar there of Argus Research, talking to us about big bank earnings. Tune in to our exclusive interview, by the way, with the CEO of Morgan Stanley. Ted Pick joins Open Interest at 10:30 a.m. New York time. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York City. Let's get a look at what's ahead today. First up, as we've been telling you, Morgan Stanley and Bank of America are reporting earnings before the bell. Then we're going to get some Fed speak from Barr, Hammack, and Bowman throughout the day. By the way, I should mention on the subject still of Morgan Stanley that the CEO, Ted Pick, joins Bloomberg Television exclusively at 10:45 Eastern time, so tune in for that. And then in terms of the stocks that we're watching, Avgo, Broadcom is moving higher in the pre-market, as you can see, deepening its ties on chips with Meta. GitLab gains an expanded Google Cloud partnership, so GitLab is up almost 8% in the pre-market, and D-Wave Quantum rising more than 8%. Quantum stocks are set to extend their rally after NVIDIA unveiled a suite of new open source AI models. In terms of the macro picture, S&P futures are unchanged right now after hitting almost an all-time high yesterday, 1 point away. Crude back up a little bit, 92.38 a barrel, and Brent trading at 96.27. That's it for the brief. Surveillance is up next.